Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, December the 21st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today, but here in the United States, we did get existing home sales surprising to the upside at 5.61 million units versus the expected 5.52 million units. So looking like people got off of the porch and went out looking for homes, and the existing home sales seem to be doing better than the new home sales. So increased interest rates has gotten some people out there shopping. Then we also got crude oil inventories. This was the DOE number that we got today. That's the number that I look at, you guys. DOE came in at 2.3 million barrel build, and it was expected to be a 2.4 million barrel drawdown, so about a 5 million barrel difference. Now, the reason why I look at the DOE, it's the Department of Energy. Now, the Department of Energy calls up all of these refineries and different pumping stations, if you will, and ask for the inventory levels. Now, it is a requirement by law that they give the DOE these numbers. Now, the API that comes out the night before is more of an index, but when they call on these different places, they the pumping stations and things of that nature aren't required to give an accurate estimate. So a lot of times, as a conspiracy theorist, it might be that these guys throw off these numbers in the API in order to sell to the retail or whoever is out there trading off of the API number, because it is so far off. It's pretty ridiculous at times. As a matter of fact, it's completely opposite of what it has a tendency to come out. It's very seldom in line. Just as a caveat to that, the API numbers last night came out for crude oil inventories as a 4.15 million barrel drawdown. 4.15 million barrel drawdown. So completely off the other side. Cushing was also a 690,000 barrel build, whereas in the DOE numbers it was a drawdown of 245 million barrels. Gasoline came in as a drawdown on the API as 1.96, and the gasoline distillates or gasoline on the DOE came in at a drawdown of 1.3. So you can see that those numbers are quite dramatically different for the most part, especially for the Cushing and the crude oil numbers. So keep that in mind when you're trading API, is that it is usually a head fake. More times than not. So watch for the DOE. That's the real number. That's the one that the real traders are looking for. With that DOE number on the gasoline build, we are seeing a bit of a pullback, down 12 cents here on the day, but was up overnight off that API report. But a big move to the downside after the DOE released its numbers. Then we got gold futures here down 50 cents on the day. It's pretty much stuck in a range for the most part. Can't break above that 9-day moving average to save its life. Strange thing though going on right now. We got strengthening dollar. We got gold going down. Most commodities going down across the board. But we are seeing, if you guys are Bitcoin traders, Bitcoin has traded above $800. It's the first time in quite some time. I think since I don't know exactly right offhand, but it's been quite a while since Bitcoin was up at the $800 level. And you would think it would fall back as the dollar strengthens as well, but it's not seeming to do that. Then we've got the bonds right now slightly positive on the day. As you can see, it's up only about 8 ticks, but continues to bounce its head up against that 9-day moving average, but can't seem to really break above it and settle there. Then we've got the Dow Jones Industrial Average, that 220,000 doesn't seem to be coming into fruition, at least today. Yesterday we did have a historical high and historical high settlement, but at the end of the day, it looks like it's starting to pull back again, and as you can see, volume is pretty much waning. Another thing I wanted to mention yesterday, and I kind of forgot, when we start blasting up here towards that 20,000, you can see volumes really increase. And a lot of it has to do with, and I've mentioned this before, these brokerage houses like TD Ameritrade, the platform that I use, E-Trade, and things of that nature, are really seeing a lot of brokerage happening right now, and that has a tendency to be the retail traders coming in and buying stocks as they see that they may have missed the boat on the rally. Well, a lot of times as a floor trader, we used to say that the retail trader was an indicator of a market top or a market bottom. When they capitulate at the bottom, and they start jumping in thinking that they've missed the run. That's the time that the market is due for a turnaround. So just having said that, yesterday and today we're starting to see a little bit of slide off in volume, but this rally up really could be a lot of retail traders getting in, and some might say that that is the time for a correction. Then on to the Nasdaq. Nasdaq's also slightly down on the day, down 8 points. For the most part, and I talked about this being the resistance area. Anytime we're going to be getting close to that 5,000 level, that's going to be a psychological resistance area, and I'm one to think that there's going to be a pullback before we really go up there and test that 20,000 in the Dow and the 5,000 in the Nasdaq. It's got to shake out some of the longs before it really, I think, is going to happen there. And then on to the E-mini S&Ps. It's down slightly on the day, down 2 points as we speak. Again, E-mini S&Ps is probably not going to pop up above this resistance area until we start seeing a push in the Nasdaq and in the Dow above those psychological levels of 20,000 and 5,000 respectively. This is the 15-minute breakdown of the E-mini S&Ps. Pretty quiet day, very low volume. As you can see, last week we had some pretty good volumes going on, but today we're starting to really see the volumes continue to contract heading into the holiday weekend. I don't really foresee this really changing a whole lot. There's going to be lackluster volume for the rest of the week, and possibly next week we'll see a little bit more increase in volume as people kind of shore up their books for the end of the year. Then Altera, ticker symbol MO. I decided to go in here because it has pretty decent implied volatility percent. Looking to just add some short theta components to my portfolio. I want to take advantage of that. I've been doing a lot of buying of option strategies as of late, especially with the last couple of webinars that we've done, kind of fitting into that mantra of low implied volatility and looking for it to expand. But Altera has pretty good implied volatility, so I decided to go in there and put a strangle on it, and did the January because, as you can see, they have their earnings coming in right after the expiration of this January contract, so I didn't want to have that with a short option strategy where I'm short, naked short strategy for collecting premium. So I'm trying to keep that out of the whole scenario. And with Altera MO ticker symbol, I went into the January and sold the 64 puts and the 71 calls to create that strangle. I collected 75 cents for that. So it's right in line with my rules for that strategy for the strangle. You can check that out at Pro Trader Strategies. Friday webinar is going to be on the put calendar, and that's going to be a really good one. We can take advantage of low implied volatility. We're just kind of wrapping up the end of earnings season, which kind of leads us gives us 1 month break for the most part before we start getting into another earnings cycle, and that is perfect for this scenario because we look for implied volatility to expand during that binary event, which is an earnings event for these different stocks, and we can take advantage of theta decay in the front month where it's pretty clean right now. So I'm going to show you how to build that strategy out. Go to protraderstrategies.com. It's going to be on Friday. Hopefully you guys can stick around for it. If not, sign up and we can get that sent out to you and you can watch it at your leisure. All right? If you can't take that, take it easy.